Hey everybody, this is Andrew. I'm going to talk about my weekend review of what I do with my stocks and where we're at. And what it seems, at least to me, that we have two different markets. If we look at the Nasdaq, we're below the 50-period exponential moving average, which is definitely not a plus. Ideally, we want like these periods where the 20 is above the 50. So it's a negative. That's one. Comparatively, if we look at the S&P 500, it's above, even though we had a couple of days of pullback. So where I'm at, or we can even add in the Dow also. Let's just do that also. And you'll see, very positive. The question is, when you have this dichotomous market, what's going to happen? Either side is going to turn around. Either the Nasdaq's going to turn around and start rebounding, which is going to give us some nice opportunities. And that's why we need to stay focused on our stock watch lists, trying to buy the strongest stocks fundamentally, as well as technically on breakouts. And alternatively, the Dow and the S&P 500 could turn downwards, and we can end up in who knows what. No one knows, really. I mean, basically, you have to take it day by day, not predict, but just take it and then do your best discretions. So with that said, what I do is I do two things. Let's start with stocks that are on my watch list that are interesting. Google is not interesting, and I'll tell you why. You can see you have a breakout here of about the highs of about here. You're above the moving averages, the 20, the 50. The other thing, which I always do, is I go to Investor Business Daily, and I rank the stocks. And what I do, which is interesting, basically, it ranks out of all the stocks. It has 5 flaws, but it's a composite ranking of a 94. I look from the return on equity and profit margin to be above 40. So actually, Alphabet is on my watch list. If Alphabet or Google can take out these highs, it can be very interesting. Another one I'm looking at is QRVO. QRVO, you can almost see the same thing happening again. I want to be buying pretty much at these highs. I'm not looking to buy the lows and the highs. The other thing, too, is you can almost buy here and be a little bit disappointed because it hasn't worked, because you have this shakeout here below the 50-period exponential moving average, and then rebounded. I mean, here's another buy point here on QRVO. And also, what's interesting, just do like this, you'll see that it's ranked in A. And it's better than 98% of all stocks. So fundamentally, I'm basically, again, combining my technicals with fundamentals. Above 40, an A, this is definitely on my watch list. I have some other stocks that hit my, let's say, technicals, but they're not good enough. And I'll show you why. Plantronics has a buy point of about, you can use here as a buy point, or here as a buy point, or here as a buy point, depending on your own personal reference. But my negative with this one, which you will see, Plantronics, it's not as good as QRVO. It's a C-. That's another problem. I'll give you another one that I'm looking at that, from a technical standpoint. Let's just run through these. Monolithic Power. Okay, you can see it's an 89, and it's a B-. The only positive is here's 50. It's 57.5 with a return on equity and profit margin. And then if I look at this, here we go. Make a combination here again. Whoops, helps if I type better. Monolithic Power. And you can see the breakout here. You have a breakout here. This would be the better breakout. I mean, and you know what? It took out a lot of people. A lot of people are disappointed here. And if it turns around, which would be around here-ish, this could be an entry. But the thing is, it's not fundamentally as strong as some of the other ones. Here, let's look at this one. This is Polaris. See a 92, a B, 51.7. I prefer really to be in the A's and above the 40, and also on my composite rating to be above 95. Just another, my own personal preference. Let's see PII. You had the breakout actually here-ish, and we've retraced it. And you had a lot of volume here, which is also a very big positive here. I mean, as long as you're not 5% away from your entry, you can also use this as an entry point. Okay, I don't know, did we do Yeti? And Yeti is very interesting because you have a couple places with Yeti to enter. Right here, another Jesse Livermore shakeout pattern after this big move up. So the buy point would be about here-ish, the high of here, about 78.57. And then just look here. Because you want it to be almost rule-based so it doesn't get too much discretion. Again, you're looking for the breakout, which is easy to see. And then what you want to do is you want to see the rankings. Here, you have an A-. Obviously, an A- is better than a B. But you're better than 91% of the stocks. But check out these earnings. The return on equity, it's massive here. That's pretty impressive. Then we have some house builders, obviously. Let's do D.H. Horton. And very impressive. 98, you have an A, and 35, you're a little bit shy here. And let's get a D.H. Horton here. And pretty much the breakout was about here-ish. We're just about there again. Knocking on the door. There's another house builder here. And you can see, again, the breakout. You can even draw a trend line here if you wanted to. And you have the crossover. You have a lot of strong volume. But again, there's a couple different places. I mean, this is one area. This is a very early entry. I would like to see a little bit above here, or can even be up here. I mean, I think realistically, this is showing a lot more strength, especially when a market is like, again, I just call it, it's an anomaly where you have one index going up, let's say the Dow and the S&Ps, and you have the Nasdaq going down. Usually, like going into the Nasdaq. This is what's interesting. Also, going on to the let's say the pent-up demand with home buying, and I mean not home buying, but just home furnishings. Again, we're buying the highs again. And again, another reason is you have this pattern, shakeout pattern. So your buy stop would have been here, right around here. And you check it. Whoops. B plus and 29. This is a little bit shy here. That's a little bit negative. And let's do another one here. Because energy companies, I mean, we have this, getting back to normal stocks that are coming on also, but this one's a kibosh. There's nothing to think about here. It's a D72. I'm not interested. Definitely not interested, but it does have a pattern that came across. And let's do this one. Wayfair. And it's really not good enough for me. And it's a B. So, and you can also look at the pattern. You can easily see the breakout of could be the highs here. But again, it just doesn't do it for me. The other one, I'm just going to talk about one that was interesting that happened last week. I was in Williams-Sonoma. And I believe it got in, it was around here-ish. It was one entry. It was either, I forgot when it was actually. It was either here or here. But you can easily see what happened. I mean, let me tighten this up. We're definitely in an uptrend. We based. I had a Jesse Livermore pattern. Ka-ching. But this one is a little bit hard to hold, actually. I took my 20% profits, followed it up, and then this is the day that you pretty much got shaken out when you chase it with a 10-day. But it's hard to have bought this. I mean, really hard, when you have these massive gap ups, and we also continued. So let me just give you, in my own personal opinion, the market it's never easy. When you have one market going up and one market going down, it just makes it even harder. The only thing you can do is, and there's nothing wrong about this, is just sit on the sidelines. Because until the market proves itself, you really want it to try to prove yourself, to try to put your odds in your favor. That's one idea. You can sit on the sidelines and cash. Or you can go in much smaller position sizing. So everything I'm trying to present are things that I'm looking at myself, that are on my own personal watch list. It's not saying to go buy these things. Absolutely not. It all depends on your own personal situation. And again, you need to trade with the plan. And again, what I do is I combine technicals along with fundamentals in order to try to see if a trade will work. And what I do is I scale in. 50% is at the buy point, and then I'll add in 30% with several percentage points above that, and then a 20%, another couple percentage points above it to make a full position. Also, I put in a 7% hard stop that if I hits my stop loss, I'm out. Nothing to think about, because small losses can become big losses. So I hope this is educational to you, that you like it, and you can subscribe to my channel, and hopefully it can make you a better trader. Thank you very much.